Okay guys, so global oil inventories are running out faster than anyone expected, and the warnings are now coming from every direction at the same exact time. Exxon, Chevron, the International Energy Agency, Goldman Sachs, JP Morgan, and even the Federal Reserve have all independently issued warnings about where this oil crisis is heading. And guys, when that many major institutions are all raising alarms at once, that's not noise. That is a signal worth paying very close attention to. Right now, oil is sitting around $90 a barrel. The Strait of Hormuz is still effectively closed to normal commercial traffic, and the world's emergency oil cushion is being drained at a historic rate with honestly no clear resolution in sight. So I ask that you stay with me all the way to the end of this video because I'm going to walk you through exactly what these institutions are warning, what the data on global inventory actually shows right now, and what all of this means for where prices go from here. Because guys, the window to understand what's coming before it hits is closing faster than most people realize. Alright, so let's start with what the oil companies themselves are saying, because these are the people closest to the actual physical supply situation, and their warnings this past week were pretty serious if you ask me. Alright, so Exxon's senior VP came out and said that as oil inventories fall towards minimum threshold levels, oil could go from the current $90 a barrel to $160 a barrel in a very short period of time. His exact words were that we were approaching unheard of inventory levels, I mean really, really low levels, and that once you get to that point, prices unfortunately just shoot up fast. Now, you can debate whether that moment hits in 2 weeks or in 3 weeks, but the direction is not being debated. Chevron CEO followed that up by saying that the buffers and the shock absorbers are being steadily drawn down, and the ability for the market to absorb this imbalance is drastically diminished compared to where we started before. He specifically said there is more upward pressure expected as we get into June and most certainly into July. And UBS analysts back that up independently, saying that oil inventories are approaching record lows and that the buffers have now largely been exhausted. So guys, what all three of these organizations are saying in plain language is the same exact thing. The reason oil hasn't spiked even higher yet is because countries have been drawing down emergency reserves to plug that supply gap, and that cushion is basically nearly gone. Even with Brent around $95 today, analysts are warning that the worst of the crisis might still lie ahead. And when the people who actually produce the world's oil are saying that publicly and independently, that deserves your full attention. So now let's look at what the IEA, which is the International Energy Agency, is saying, because their most recent oil market report contains numbers that are genuinely alarming when you read them in full. Guys, the IEA has formally classified this disruption as the largest coordinated supply emergency in oil market history. And that designation reflects both the volume of supply affected and the complete absence of any readily deployable replacement supply to fill the gap. Their report shows that the output from the Gulf countries affected by the closure of the Strait of Hormuz was 14.4 million barrels per day below pre-war levels. And just in April alone, stockpiles in developed countries plummeted by 146 million barrels. And the cumulative supply losses from Gulf producers have already exceeded 1 billion barrels since the war even began. Capital Economics issued a formal warning that if the strait remains effectively closed and inventories continue being drawn down at the pace seen just in April, oil stocks could reach critically low levels by the end of June. And here is the critical point that most people miss. Inventories don't have to actually hit zero for prices to spike violently. The moment markets can see that the trajectory is headed towards critically low levels with no resolution in sight, that's when prices start moving hard in anticipation. That is how oil markets work, and that moment may be just weeks away, not even months away. And guys, before I keep going, if this video is giving you any valuable information, please do me a favor and smash that like button, leave a comment down below, and subscribe. Your support genuinely helps this channel grow, and it helps me to continue bringing this information right at the forefront as soon as it happens in these videos. So please show some love by smashing that like button, leaving a comment down below, and subscribing. Alright, now let's go into the next segment. Alright, so now let me show you something that is not getting nearly enough attention, and that is what is happening to America's Strategic Petroleum Reserve, which is our country's emergency stockpile of oil. Just back near its peak, the SPR held 725 million barrels. That's what it took roughly 27 years to build up from a starting point of 270 million barrels back in 1982. President Biden drained a significant portion of it by trying to keep gas prices lower, and now President Trump is draining it further for the same reason, to plug the supply gap and to slow down the price spike. The most recent weekly data shows a release of 9.1 million barrels in a single week, just short of the all-time record release set just the week before. And here's where the numbers get really concerning. As of late May, the SPR is down to 365 million barrels. That's historically low and falling really fast behind it. Guys, just to put that in context, we are now sitting at roughly half of what the reserve held at its peak. And we are drawing it down at a record pace during what the IEA has called the largest oil supply emergency in history. The honest reason presidents drain the SPR is political. Midterm elections around the corner and keeping gas prices from spiking too fast keeps voters less angry. But this cannot go on indefinitely. At the current rate of the depletion, the math on how long this cushion can hold honestly doesn't look good. And when it's all said and gone, the market is going to have to price the real supply shortage with nothing left to absorb it. So now let's talk about the actual situation on the ground at the Strait of Hormuz, because I want you to understand just how far we are from any kind of real resolution. Guys, before the war, the Strait was seeing 120 to 140 vessels passing through every single day. Right now, the number has collapsed to a small fraction of that, and the contrast is stark when you look at the vessel traffic data side by side. And calling what's happening a ceasefire is honestly generous, because just last week, Iran attacked vessels in the strait that tried to cross without authorization. The US retaliated by bombing southern Iran, and then Iran responded by firing a missile at a US base in Kuwait. The US Navy blockade remains in place and actually fired a Hellfire missile into the engine room of a vessel trying to reach an Iranian port over the weekend. US Secretary of Defense Pete Hegseth said publicly that the US is ready to restart full strikes on Iran if no deal is reached. And Trump has been saying the same, either a great deal or more fighting. And while patience in negotiations is understandable, the problem is that every single day that passes without resolution, global inventories are depleting even further. Countries have a few options, but none of them are easy, and policymakers should prepare, honestly, for a long crisis. The negotiating timeline and the inventory depletion timeline are honestly not aligned, and the gap is exactly what the oil markets are starting to price right now. So, finally, let's talk about where prices actually go from here and what this means for your financial decisions right now. Again, guys, Capital Economics has laid out two scenarios. In the moderate escalation scenario, Brent reaches $130 to $140 per barrel by the end of June if inventory drawdowns continue at the current rate. In the prolonged disruption scenario, oil stabilizes near $150 per barrel through probably 2027, driving inflation towards 10% in major economies and forcing central banks to raise rates again. JP Morgan has warned that oil could push even past $150 per barrel if the Hormuz crisis persists. And Exxon's senior VP put $160 on the table. And for context, guys, oil hit $140 per barrel just back in 2008, and that was without the largest oil supply disruption in history. So, adjusted for inflation, $140 in 2008 is closer to $200 in today's dollars. And if prices go anywhere near those levels, the recession risk becomes very real, and the Federal Reserve's response would likely be massive money printing, which again spikes inflation further and makes every financial decision harder for every American household. So guys, here is my honest opinion and what I think you should be doing right now with this information. First, if you are an investor, this is not the time to be unhedged and fully exposed to a market that could get hit hard by a $150 oil shock. Just think about how your portfolio holds up in that scenario. Secondly, on the household side, build your financial cushion now before the next wave of price increases hit grocery stores and gas pumps, because the inventory data says that the wave is likely coming again in either June this month or July. And thirdly, watch the Strait of Hormuz vessel traffic data and inventory numbers closely over the next few weeks, because those are the real leading indicators of where this all goes. It's not the diplomatic statements or not the press conferences. It's the actual ships moving through that waterway and the barrels that are left in storage. That's the data that tells you what's actually really happening. And I hope this doesn't play out to be the worst case scenario level, but I'd rather be prepared and wrong than unprepared and completely blindsided. So guys, I want to thank you for watching this video all the way through. Make sure you like and subscribe so you don't miss any of the next updates that I put on this channel. I tend to drop a video every other day, so I really appreciate you watching this all the way through. And please comment down below. Tell me what you think happens next. Thanks again, and I'll see you guys in the next video.